Let's bring in Bill Baruch, Blue Line Futures President. Bill, when you're looking at prices like that, you have to think it can't keep going up, but it seems to just continue to trend to the upside. Is it going to get even more expensive from here?
Well, the sad news is food prices in the grocery store tend to be some of the most sticky. And once they move those prices up, they may not come back down. But it's going to be a tough one here, and really it matters too what the crop looks like, and we're in harvest right now in the U.S. soybeans and corn, but if we look down to South America, they've had a tough planting season with very dry weather, and then there's obviously orange juice. Everybody loves their orange juice, and it could be the worst crop in 80 years. So there's a lot of questions behind that. And that's something that we at Blue Line, we put a lot of agricultural research out daily. And that's something we were poking to back when the Russian invasion of Ukraine started, was that these prices had moved up. But once they came off, it was a matter of, what does the U.S. crop look like? There are other factors in the world that are going to impact these prices rather than just the war in Ukraine, which is the breadbasket of the global economy.
Yeah, and we've seen some dent in demand with housing. We've seen some dent in demand with used cars, but food is unlike all these things, of course. Fruits and vegetables surged 1.6% for the month. What will bring these prices down if you're the Fed?
I think if you're looking at it from the Fed's standpoint, I mean, they are concerned with the food prices. They are concerned with the stickiness here. But the real question when we're looking at Fed policy and where it's going, the direction it's going, it's going to really rely on OER, the owner's equivalent rent. And that's the 1/3 of CPI. It's been extremely sticky. Does it roll over at some point in quarter one? And that could really be the sign that inflation has topped. That's going to be the question. And that's going to allow the Fed to lift their foot off the gas. You got an interesting move here in the market where you have the equities, and then really commodities have begun to follow. And really all sets started with the U.S. dollar. The U.S. dollar spiked on this hot CPI number. But once the U.S. dollar came off, it's allowed for a relief of downward pressures in stocks and commodities. And so once you get this move back up, you're reflating these assets. Now, not at this level, but does the move continue? And that's something we've been noting at Blue Line Futures too, is the potential blow off top in the U.S. dollar really began about 2 weeks ago at the end of September with the UK move and how the cable had fallen out of bed. And the yen and the euro were already pretty weak. But when you get sharp reversals like that in the US dollar that began in potentially a lower high right now, we could be at the start of a top in the dollar, which will stoke prices. And your grocery bill may continue to be higher, just simply because of commodities being priced in dollars will rise.
Bill, when we're trying to figure out, I guess, how much higher, just in terms of percentage, are we talking a couple of percent? Are we talking a huge jump that we could potentially see? What do you think?
Huge jump in the average food prices
Yes.
at the grocery bill? Well, if you look at things, I saw an anecdote, I saw it on Twitter somewhere, and I wish I could credit the person that tweeted it or retweeted it, but it was a picture of a bakery and a picture at a bakery, and the baker had put a list of every ingredient and the cost, and everything across the board, from granulated sugar to flour to powdered sugar to eggs. Everything was double to maybe even almost triple the price. So you're seeing things, those prices that he's stating. I mean, I'm sure he's buying it as some sort of wholesaler, but you're looking at prices that have increased dramatically, much more than what you may see in these CPI numbers. So the real hard cost that's hitting home is much more, and that's the problem. And you've had different distortions that have taken place throughout the year. I mean, there's been different fires at different meat processing plants, outages at meat processing plants, chicken farms, things like that have also had an impact. And it's really odd to see such a wide number of those taking place. But there's been these sorts of distortions that have taken place in this post-pandemic world that have also stoked prices higher.
Want to quickly pivot to energy. We saw some relief there in the inflation print, but of course that number's lagging, and gas prices now up to $3.91 from $3.70 a month ago. Where are they headed?
Well, we've been extremely bullish energy for really since June of 2020. And it's something that we put out research every single day at Blue Line Futures. And I personally write about the S&P, the NASDAQ, crude oil, and silver and gold. And specifically for crude oil, we've always had a bullish tone. We actually went neutral when crude oil did break below $93 back in August. I think it was August, early September. And at that point, we said, look for $75. $75 is going to be the floor. We traded down to 76 in crude, and we've responded off this massive level of support that really a cleansing, if you will, of prices. I mean, a lot of people from a trading perspective got sort of ingrained that crude oil, buy the dip, and you're going to get paid, continue to buy the dip. And we needed a little bit of a cleansing. It really wasn't that much of a cleansing, but it allowed some relief and for the price of crude oil to go higher. Now we're back, in roughly $90, let's call it, although we're a bit below it here today. It really matters, with OPEC taking production offline. I don't think that, the headline drop of 2 million barrels per day in their production is the actual impact. It's more like 900,000 barrels per day, but it's definitely created some geopolitical tensions, which I think could stoke the price of oil higher. However, I'm not extremely bullish right now, and I've actually put a neutral tone in our research, because I do think with the White House right now, they're throwing the kitchen sink to try and keep prices suppressed. I don't think this is a good thing, and I think it's going to hurt in the end. But in the near term, over say the next month, you have this expiration of the November futures contract coming up next week, and then you get to the end of the month and then the midterm elections. I think that the White House will continue to release SPR and sort of go face to face here with Saudi Arabia. That could keep prices suppressed in the near term, and I think that would just be a tremendous buying opportunity back near $80 if we get it.
Yeah, prices above $4 by the midterms. Bad news for the Biden administration. All right, Bill Baruch, Blue Line Futures. Good to see you, man.